Hello and welcome to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the @JR Mining Guy on Twitter, and together with Brien Lundin, the host of the Gold Newsletter channel, and I'm really looking forward to this company introduction and company update. We're joined by Ryan King. He's the Senior VP Corporate Development over at Calibre Mining, a company that you should have on your radar screens because they are building a gold mine in Canada. So you should be aware of it. And we're getting an exploration update and a construction update. The company, of course, is already a gold producer, and we're going to talk to him about guidance. What does it look like? What do the costs look like? We're in a very high gold price environment, and I'm personally curious, what does inflation look like on the mine level right now, the company on the mines they're operating, and whether it's subsiding? That's more of a personal interest, and I'm curious what Ryan has to say about that. Now, Ryan, welcome on the program. It is good to see you again. Thank you so much for joining me here on Gold Newsletter.
Well, thanks for having us, Guy, and appreciate the opportunity and looking forward to the discussion.
Absolutely. Yeah, looking forward to having you on. Really interesting story. And as I said in the intro, you are working heavily and aggressively on building a gold mine up there in Newfoundland, Canada. But before we get into the nitty gritty, Ryan, introduce us quickly to the company. Use 60, 90 seconds for a bit of an overview.
Sure. Yeah, no, of course. So a number of your viewers may already be familiar with Calibre. For those that are not, Calibre is a multi-asset growing gold producer with assets in Central America and the United States in production. A new construction stage asset that has over 5 million ounces in Newfoundland, Canada, and is about 65% through construction, growing to be a mid-tier gold producer by mid-year of next year. So a very exciting time for the business, as we've seen with the macro environment for gold, but also Calibre has been delivering on all fronts in terms of growing our resources, reserves, as well as delivering quarter over quarter for our shareholders. So very exciting to talk about, very exciting to see what the future looks like. And yeah, Calibre Mining trades on the TSX as well under the symbol CXB.
No, fantastic. Really good intro. And I think we're going to go through the operations. Let's go through it south to north. And then last we'll talk about the exploration upside, because I think that order makes a lot of sense.
Sure.
Calibre started in Nicaragua, Central America. How are the operations going there? And give us an update.
Yeah, good. So just a bit of history on these assets here in Central America is that we did a deal with B2 Gold in 2019. Actually, right at the end of 2019, we acquired Limon, Libertad, the two operating mills and surrounding mines. At the time when we acquired these assets, at the end of the year, we had roughly $4 million in cash after commitments. We had what we anticipated to be about 50 to 70,000 ounces a year of production going into 2020, given that the Libertad facility was heading towards closure. It was heading towards closure because on the site itself, the asset was running out of resources and reserves to feed into that facility. And fortunately, Calibre has a very experienced CEO, Darren Hall, that has worked in the mining business for over 30 years as an operator. We implemented at that point in time, we decided the approach would be to implement a hub and spoke approach. Therefore, what we would do is haul material from Limon to Libertad to utilize that installed processing capacity. And fortunately, these are all low sulfidation vein systems separated by good paved Pan-American highways. Got the approvals of our local communities and in governments, and started to haul material over to Libertad from Limon, filling Limon, but only utilizing a small portion of Libertad. That first year, instead of doing 50 to 70,000 ounces, we did 130,000 ounces. And so subsequently over the years, we've now gone through 4 or 5 different EIA processes there to permit satellite open pits or undergrounds. And we've brought those assets into the production profile, organically growing, utilizing operating cash flow to do that, and then also invest into exploration, which has taken our reserves from at the time in Q4 2019 of about 250,000 ounces to now at the end of 2023, 1.1 million ounces at the highest grade tenor these assets have ever seen. So we continue to invest in the assets. We, as guided this year, we'll do 235 to 255,000 ounces out of Central America, out of Nicaragua. We're investing in exploration again. We've got 12 rigs across the portfolio there operating. As we say, this year, it's more of a transition towards resource expansion and discovery versus increasing confidence and increasing reserves. So, very exciting opportunity there. And operations are running well. We are H2 weighted in terms of our production, but very exciting that we'll actually be bringing on a new open pit mine we call Volcan, which is about 5 kilometers. It was discovered in 2022, which is about 5 kilometers away from the Libertad facility, so it will lead to additional tonnage. But we still have 1 million tons of surplus capacity at Libertad, right? So it presents a very compelling organic growth opportunity. As I say, we've got multiple rigs across the whole country. And this could lead to another exciting discovery or expansion of resources like we've had in many years as an operator there in Nicaragua. So operations are going well, generating some very good free cash flow, as you can imagine, at these gold prices. But we are investing heavily, as you've already mentioned, into our Canadian development construction stage project as well. So lots going on here.
Now, let's stay in Nicaragua before we switch over to Canada and North America here. 12 rigs is really exciting, actually. Like, how much of that is like grassroots exploration and grassroots drilling versus like brownfields drilling, like, working on converting maybe resources to reserves?
Well, I mean, if we look at those two categories, we've got probably, I'd say probably at least 30% would be more of a grassroots approach. And when I say grassroots, I kind of think of you've got a soil anomaly or a geophysical anomaly, but no past mining, right? Then we've got on existing operations, we'll call it the Limon Mine Complex, which has 3 underground mines and 2 open pit mines feeding into Limon, and then excess material gets put in a truck and hauled over to Libertad. So in and around that district, we've got quite a bit of drilling happening as well. I think this year we're earmarking about 45 to 55,000 meters there, all around where we've had some recent success, but not converting resources to reserve, like expansionary drilling. I'll give you an example. At our VTEM gold corridor, we've had some very exciting discoveries over the last few years. In 2021, we discovered the Pantheon high-grade Pantheon deposit, which is, I think the first discovery there was about 100,000 ounces at 7 grams per ton gold. We stepped out about 200, 300, 400 meters and discovered Pantheon Norte, which turned out to be about 250,000 ounces at almost 10 grams per ton gold. And we've stepped out again this past year and discovered another new zone along this corridor. So this has been about a 6-kilometer corridor, and we're only about halfway into this corridor in terms of its exploration potential. What's exciting about that is that on the other side of this corridor, so it's a VTEM corridor because it's got a high-low resistivity contact. One side is where we're having the discovery success. On the opposite side of this corridor, B2 Gold discovered over 1 million ounces. So we continue to have exploration success there. And there's a few other areas that I could mention here. Maybe I'll just mention one more. This asset has been enduring. It's been in production since the 1940s, and we continue to find high-grade gold systems. But one I'll mention that we're excited about is an area called Talavera. Now, Talavera, back in 2005 and 6, was a past-producing underground mine that produced about 800,000 ounces of gold at roughly 8 grams per ton. Now, this mine actually, interestingly enough, I mean, it's got all underground infrastructure still intact. However, the operator at that time went to a different higher-grade zone. And so it looks to us like there's a tremendous amount of opportunity there. We did some drilling last year, and I think some of the intercepts included 10 grams over 2 meters, 15 grams over 4, to name a few. Now we've gone in and we started to understand the orientation of these veins, and it looks like there's some really good exploration potential at that zone as well. So continued to have sort of that greenfields approach on some of the newer, earlier stage concessions, but also the brownfields where we've got past production, but low-hanging fruit right in front of us.
No, it sounds interesting. Like lots of potential targets. And one question I have, and I don't want to get too granular or too technical, but how are you planning to release those exploration results? Us as retail investors, like how do we follow the exploration story down in Nicaragua?
Yeah, I mean, we have a lot going on, not only from a production, permitting, et cetera, perspective, but when you look at the exploration, I view personally a public company as we need to consistently tell a story. You're turning the page of a book regularly, such that you keep an investor engaged, such that you keep the audience engaged, and we'll have, for example, earlier this year, we put out some drill results from the end of our 2023 program. We don't put everything out at once. So as results come available and we think they're important and interesting and meaningful for the evolution of our story, we'll put these out, anywhere from 5 to 15, maybe it's 20 holes at a time. But it's consistent information to the marketplace to engage an investor to go, hey, what this is exciting. Let's continue to follow this. And if people, sit on their hands and don't put news out for 8 months, even though they've got some great drill results, or even 12 months, and put an exploration update once a year, I don't find that to be as appealing, for all investors. Some investors go, look, institutional investors may go, look, I like the story. I like how it's tracking. I may want an update once or twice a year. I don't care about the regular news flow and the exploration. But there are those that go, hey, this is important. It's important because we can start to see how the company's, telegraphing the news, and also understand what's happening with that geological opportunity, right? Less information per touch point, such that it's easier to digest, right?
No, that makes sense. And no, I appreciate that, so we don't have to go digging through the MD&A to find some exploration results. Like some of the producers just say, well, it's not material. It doesn't really move the needle for us. But I think at that stage, I think it is still massively material. You have 1 million tons of production capacity that you need to fill, or can fill, or don't say need to fill, but have the opportunity to fill. Then I think that is material.
And Kai, I tell you, from my perspective as an investor in this space, what is exciting to me? Is it hitting your production numbers and generating some revenue as a producer? Okay, that's expected. What is exciting? It's finding new stuff. It's adding to what is already there, or discovering a whole new zone that could have a very material impact in production growth in the future. So the exploration piece of our production story is important. And I would say it's the appeal that gets various investors interested in our space. Not only, the metals and mining and resource investors, but it's the generalist and retail that don't know about mining that say, they see a drill hole and they see what happened on a company over here. That's the appeal.
One thing that exploration also helps with is mitigate risk potentially a little bit, because you have various areas you can draw from. And you've just announced yesterday that you had a bit of a pitfall, like movement, or sorry, not slope movement on one of the pits. And exploration sort of helps mitigate that, because now you can shift focus to another area, potentially higher grade. Can you give us an update on that? Like, what does that look like? Because you maintained guidance as well when it happened. So what does that look like?
Correct. I mean, mining is not an easy business. There's always issues that are coming up, whether it's permitting delays or cost overruns, or technical issues within the assets. But in this particular instance, with one of our open pits, and we have a number of open pits in Central America, one smaller section of a pit wall at one of the sources slid down, moved about between 5 and 10 meters. Not a significant movement, but nonetheless, we take this stuff very seriously. Therefore, on May the 25th, this incident happened. We didn't report it until yesterday. And some may say, well, why did you wait that long before you reported this incident? Well, number one, there was no personnel injured. There was no safety incidents. There was no equipment impacted. And number three, we really wanted to understand what this impact was to our business. Was it significant? Did it require a significant amount of capital, or delays, or impacts to production outlook? and after that full review, yes, I mean, it had an impact to our Q2 production numbers being slightly impacted on the negative side, but we don't guide on a quarter by quarter basis. We guide on a full year basis, and our full year production is intact because what's happened here now is, and in fact, there's been a significant amount of engineering reviews on this, not only by ourselves, but now by our third party geotechnical engineers have reviewed not only the impact, but the development plan that we have to go ahead. And also, and in understanding all of that, our full year guidance was intact because we are now resequencing how the mine would and when the mine's higher grade material would come online. It was anticipated to start in June, right? So instead of in June, now we're going to go to a lower grade. In fact, I think we're back into the pit now, if not now in the next day or two. We're back in the pit at a lower grade face and or ore source inside that pit, right? And then in the next couple of weeks, we start working back in that area, getting back towards the area of high grade ore that will feed into the mill, very likely mid to end of Q3. So these things happen, but in this case, I think this was a very isolated incident. No issues, no impacts, and no health and safety risks. So
that's the most important part, and I appreciate you emphasizing that. No, Ryan, I think that's very comprehensive on Central America. I think it's time to look north, and let's look at maybe start in Nevada. Let's talk about the operation there. A bit smaller, of course, a bit of a stepping stone into North America, into a tier 1 jurisdiction. Give us a quick update there, because we need to spend a bit more time, of course, on the Valentine mine and the mine built there. But what's happening in Nevada right now, Ryan?
Well, it's a good point. It's a stepping stone. It's a great way to put it. Actually, in fact, internally here at Calibre, we look at Nevada as a cash flowing exploration opportunity, right? It is cash flowing. We're 40 to 45,000 ounces at a heap leach mine there. We've got great operators there. We've got a great leadership team there. We have increased reserves 50% since we took over the asset. I think it was we closed the deal in January of 2022. So we've seen some good progression in terms of resource conversion and reserve increase. So the main asset is called Pan. It's got about 300,000 ounces in reserves. The secondary asset there that we've been working on behind the scenes is called Gold Rock. Gold Rock in total resource category is about 500,000 ounces. Now, the interesting thing here is Pan it's a low grade. It's 0.4 gram open pit heap leach mine with about a 2-to-1 strip ratio. So you have to be very focused, very tight on your cost controls, and our operating team does that. I think our average all-in sustaining cost at that mine is right around $1,600 an ounce. So we're roughly $800 an ounce margin there. We are exploring there as well. The previous company that owned this asset was called Fiore Gold. So they had the Pan heap leach mine. That was their only producing asset in the portfolio. They had the Gold Rock development stage asset. And Gold Rock is located only about 15 kilometers away from Pan. They had various different concessions in around that totaled about 220 square kilometers. And then they had a 2 million ounce measured and indicated resource in Washington, which has interesting dynamics. Hecla is right near that, our asset there. Not in production, but they've got assets there. And then Kinross has a mill and a mine on care and maintenance. And I believe my understanding is they've had some success drilling there and maybe looking to progress that forward. So an interesting dynamic on 2 million ounces in the United States. But going back to Nevada, as you stated, Pan, 40 to 45,000 ounces a year. We've got 2 rigs operating there between Pan and Gold Rock. And here's the interesting thing is that Gold Rock, we've just recently completed permitting there. It has been federally permitted for a while. We just recently got state air and water permits for that asset. Not looking at developing a standalone heap leach asset at this point in time, given what we're doing in Canada at the Valentine Gold Mine. But there looks like there could be some technical synergies between Pan and Gold Rock. Gold Rock being a little bit higher grade. It's about 0.7 gram per ton gold open pit heap leach oxide asset. We're doing some additional metallurgical work and technical studies to really understand what that looks like and see if there could be some economic synergies such that we could maybe mine at Gold Rock and haul it over to Pan. work underway. But again, it's not something that's a huge priority in the portfolio at the moment. Again, this would lead to mine life extensions versus annual production increases, very likely, but remains to be seen. We'll continue to do the work there.
Yeah, I'm curious. Like at the end, I'm going to ask you a bit of a strategic outlook. What are the plans moving forward? You got to have an eye on the maybe the next project down the road after you're done with Valentine. Going to come back to that and what the plan is with Nevada, because even a small mine takes as much work as a big mine sometimes. So I'm curious what your thoughts are moving forward. Maybe there's a divestiture in the portfolio, or maybe you're adding to it, because I know Orla bought Contact Gold, and Contact had, I think it was Green Springs, the asset right next to Pan, I believe. So
yeah,
curious what the thoughts are. But I don't want to waste too much time in Nevada, because it is a smaller part of the portfolio. I want to jump now to Canada. I want to talk more about the Valentine Gold Mine development project here. And Ryan, we desperately need an update. Where are you guys standing? And 65% completion. And that was May 14th. So are we at 68% now?
You like those odd numbers, eh?
I love progress reports. It makes it easier for me as a retail investor to follow along. So
sure. Well, the big update came May the 14th when we came out with a capital cost update, and that was an overhang or market ambiguity that needed to be rectified. Marathon Gold was the previous company that owned the asset. Marathon had given the market an update that the capital cost to complete the project in Q3 of 2023 was roughly $510 million Canadian. And when we did the due diligence, going into the due diligence on this asset, we assumed $100 to $150 million more capital cost. We assumed, putting in our models anyways to ensure that we could advance the further due diligence, technical due diligence. We assumed minus 10 to 15% of grade, plus 15% on operating costs, roughly in that ballpark. And that checked all the boxes for us. So when we put that into our model, we said, does this still make sense? Yes, it does. And so in going through this and then closing the deal in January, we started immediately to really get into the details here on the capital cost and all aspects of organizational roles and responsibilities and the right people in the right roles. And so there's been very significant progress. I mean, for example, we've now come out with capital, and the total number here is 650 million Canadian. But the key component to this is that I think that Marathon's number was based on a 60% engineering completion versus Calibre completing engineering now at 98% of detailed engineering. So that gives you much more confidence in the number that you come up with, right? At the same time, we came out and said it was going to be about $280 million Canadian to complete the build and have initial production. And so Calibre today sits on about 144 million at the end of April, 144 million of cash US and 150 million restricted cash. That's the Sprott Resource Lending Facility. So it puts us at about $400 million Canadian. So fully funding the project just from cash and liquidity on the balance sheet, not including any operating or free cash flow that's generated from our 275 to 300,000 ounces a year from Central and North America. So yeah, as you mentioned, I'm not sure exactly where we're at, but we're definitely higher than 64%. The teams have been really advancing steel, mechanical, and piping in the facility and at the site. They've been advancing electrical and instrumentation. So those are key large contracts have been fully negotiated and awarded. All the earthworks done on the project. So tailings done, signed off by third-party engineers. Now the liners are being laid. So the final stage is there. Power is at site. This is hydroelectric power is now connected to site. So we're really quite advanced here. And actually mining the open pits. I think Leprechaun and Marathon, the two primary pits to begin with, are being mined and stripped. So waste goes into that earthworks, right? It goes into roads, other infrastructure, foundations, footings, as well as the tailings, right? So and of course we've got ore stockpiles beginning to increase. Conveyor system set up. I think the crusher's been made and developed. and being brought to site. All the mills, all the motors are on the island of Newfoundland. So yeah, no, we're in a very good position to deliver this on time as expected, which was the delivery of gold production in Q2 of 2025.
Yeah,
So
fantastic. Sounds like you can flick a switch tomorrow, to be honest. Like, I was wondering, why does it take another year to get it done?
yeah, no, fair enough. I mean, these things, I guess, are pretty detail oriented, aren't they? And they require a lot of people. I mean, this summer we're going to have a very full camp. I think we're camp is between 400, 450 people, and that camp is probably going to be pretty close to full.
Yeah, I can imagine. It's going to be busy out there. Fantastic. Just quick follow-up question. Like, where was the calculation off by Marathon? You mentioned, okay, the detail engineering wasn't completely done. So obviously, I'm guessing a couple steps were missed or weren't fully calculated out. So I'm curious, like, any major hiccups, anything that you need rectifying, anything we should be worried about?
Well, I mean, I guess the thing is that, Calibre fortunately has a very strong and experienced team that have built mines around the world.
I think Darren Hall moved to Newfoundland the second you guys bought the project, wasn't it? Like, I think you might have mentioned it to me, didn't you?
He moved there for 3 weeks, yes.
Oh, okay. Sorry. I thought you meant, okay.
No. He's, as the CEO of the company, he's going to oversee all aspects and put the right people in place that he can trust to deliver that and have confidence in those people to deliver those products. So, we've got a VP operations in Nicaragua. We got a VP operations in Nevada. We have now a VP operations in Canada, recently hired. So one of the risks that we saw originally was ensuring we can get the right people in the leadership roles there. And now majority of the leadership roles have been filled. So that's one big check for Darren's level of confidence with the project now, is we've got people there that we can trust. So we've got a strong operating team. We now have a strong, we have a strong projects team, which has been advancing the project. We have a strong operating team now. So the two will start to dovetail, and it's, we're still 12 months away from gold production, right? Or slightly less than that now, being in June. But you want to ensure that these folks start working together. And so what Darren also brought in, and this wasn't in the capital cost estimate, was a pre-commissioning and commissioning team, a pretty significant team, Reliable Controls Corporation out of Salt Lake City. Bring them together such that they can customize, putting together procedures and policies for how everything runs and operates. And that's a pretty significant step. Not always is there a pre-commissioning commissioning team in an asset of this size. Darren has worked with this same group in Australia at Boddington. Boddington at one point in time was one of the largest open pit mines that was in Australia. So this group helps facilitate that and ensure that you identify aspects prior to going into production. So anything that may need to be tweaked along the way, right? So key to have that there. And when we think about, you asked the question, what are the key differences here? And a couple things. So cost underestimation was a big aspect. A junior company, right? Trying to develop a junior company with no cash flow, trying to develop a major open pit mine in Canada. It's not easy to do. The folks, they went out and did a big equity raise in Q3 of 2022. They then took on a Sprott Resource Lending Facility at the same time. I believe that at that time there was great intentions, but not quite enough detailed engineering done to be able to see that, the required capital to complete this project in order to complete it responsibly and to ensure that the product was able to deliver for a long, long time. So about $70 million in underestimation, but also the previous owner said, Q1 of 2025 would be in production. Well, that Q1 to Q2 schedule shift may not sound too significant, but you're talking about millions of dollars where people are operating, putting material on a stockpile, taking waste wherever into waste dumps, and operations are happening, but gold isn't coming out yet, right? So you still got a lot of capital there. So that capital shift from Q1 to Q2, a little bit of project optimization, as I mentioned, the pre-commissioning commissioning team coming in, that part of that site optimization in terms of infrastructure. So about $110 million of capital, really in line with what we had initially thought. And then there was about $35 million that we brought forward into phase one. So the 2022 feasibility study had a phase one of 2.5 million tons of initial throughput. And then in years about 3-4, we went up to putting in some additional capital, a regrind circuit flotation, going to 4 million tons, which we've actually brought some of that capital now forward into phase one to look at optimizing the phase one as we're able to do that, given the liquidity we have and cash flow we have. So that kind of breaks it down into three buckets, de-risks the project significantly, but also allows for the project to be all that it can be, hopefully in the early days. And now what's interesting is we're looking at what could phase two look like, right? Could it be bigger than 4 million tons that was originally envisioned in the feasibility study? And, you look at all the aspects, currently a 3-pit open pit mine plan. And the opportunity here is that, hey, let's do some more exploration. Let's see if that can inform our decision on scope and scale, but because potentially this is larger than, 3.5, 4.5 million tons of phase two, right? So let's understand what that could look like.
Don't steal my thunder, because that was my last question for you on the Valentine project, was exploration here. And because you used deliver a long time. So deliver a long time needs a long life of mine, meaning a lot of reserves and a lot of resources. You mentioned 5 million ounces already. But what are you looking at? Because you just put out some exploration results this morning that are outside of the known pit area.
Correct. Yeah. So this is one of the aspects, as I mentioned earlier in the discussion, right, is what I believe can really attract investors to a product. And our product is Calibre Mining stock. The opportunity here at Valentine is, from what I can tell, I'm not a geologist, but I've been around the space for 20 years, not the Valentine Gold Mine, but the mining space for 20 years now. And I've met and spoken to many different geologists, some of which have worked on this project, board members that were historically on this project, third parties that actually worked to get a Franco-Nevada royalty on this property, probably 10 years ago. Very excited about the exploration opportunity here. And Pierre Lassonde was one of the largest shareholders of Marathon Gold. And I'm not going to speak for Pierre, but you can see what happened here is that Pierre and team really loved the exploration potential. They discovered 5 million ounces. Then the management team and board shifted and decided the best thing to do for the business at the time. I'm not going to discredit what their decision or how their decision was made, but they shifted and decided to put the asset into production. Very difficult to do as a junior. I would always encourage juniors to continue to drill and find more. If you're finding an economic gold deposit that's 5 million ounces, chances are there's going to be more gold there. Chances are, especially in a system like this. And I would always encourage juniors to try not to encumber the asset with a royalty or a stream. The best you can is equity, because that's where M&A happens. If the asset is not encumbered, bigger companies, producing companies, want that unencumbered asset in order to add it to a portfolio. And that's why M&A is exciting in the space. M&A has probably slowed down over the years because, yes, it's been a difficult equity market, but also because assets are becoming encumbered because junior companies can't raise equity. So they go to a stream, they go to a royalty. I find that challenging for those that would like to acquire these assets. Now, fortunately, this asset's not too encumbered, right? But that shift, I believe, stalled out what the potential could be. Back in 2022, when they decided, no, let's now put this into production ourselves, I believe that kind of probably capped the upside of the stock, because at that point in time, the company was just doing infill drilling and had been for the last year and a half, 2 years, permitting and studies. So there really hasn't been any exploration, true resource expansion, discovery drilling for a number of years now. Let's just go back in history on Valentine for a second. Marathon was discovered, I think, in 2013, roughly. So, Leprechaun. Leprechaun is the name of one of the 3 pits. So Leprechaun was discovered in 2012, 2013. Marathon, the second of the 3 pits, was discovered in probably 2016. And then Barry, the 3rd pit, wasn't discovered until 2019, 2020. And so what this tells us is that this is a very underexplored region that has huge potential. And we're talking about 6 kilometers where those 3 pits are. That's 6 kilometers of the 32-kilometer long shear or faulting system that hosts that gold mineralization. There's now, what's been identified now on the 250 square kilometer land package that is Valentine is there's 2 fault systems, 2 shear zones that total 64 kilometers. So a parallel system of Valentine is intact that's never been drilled. And so interesting stat here is that this is an orogenic gold deposit, very analogous to Sigma Lamaque, very similar rock type. It's got quartz, it's got tourmaline, it's got pyrite, very similar. Sigma Lamaque is 18 million ounces of gold. So, you look at these types of systems and you overlay the Valentine shear into that type of a system, you demonstrate, wow, there could be big upside here. And that's why we're excited. We're going to do more drilling this year. We might even look at ramping up to a much larger program this year, given that we want to inform what does phase 2 look like, but also drilling is exciting. Finding more gold is exciting and is definitely very accretive for a company looking to align ourselves with our shareholders and increase shareholder value.
No, 100%. And I agree with you there, Ryan. Fantastic. We got to talk about strategic goals of the company. You still have your hands full with Valentine. Maybe I'm getting ahead of myself here a little bit, but looking ahead, like what's the vision for the company? Mid-tier producer, 500,000 ounces. That's nice. But what's next? What do you see next? VP Corporate Development. You're in charge of that department.
Yeah. I mean, honestly, we've got, as we've talked about, we've got 1 million tons of surplus capacity in Nicaragua. We are having success drilling, but we haven't found, this game-changing world-class asset there yet. But exploration, geology, geosciences would tell us that there's a significant opportunities there. I mean, porphyries have been found, skarns have been found, epithermal veins have been found. So there's tremendous active geology there. So it's very exciting. And with the sunk capital that is already in place, it's low-hanging fruit. So it's go out and continue to drill and explore, because now we've demonstrated that we can mine and haul, permit, mine and haul all around the country. And we can do that cost effective. So that's kind of low-hanging fruit there. Nevada, we continue to analyze what this looks like with Gold Rock and Pan and the synergistic views. 2 million ounces sitting in Washington. Yes, it's probably more challenging from a permitting location, but Kinross is there, being active again. Hecla is there. There could be some synergistic opportunities there as well. So hard to deny that, and we'll see how that evolves. But honestly, Kai, and you probably hear people talking about this all the time, but when Valentine gets into production, that's Q2 of next year. Calibre is going to be graduating from a junior gold producer to a mid-tier gold producer. So there's a clear re-rate opportunity here for our shareholders. Yes, we have to deliver it, and so it's on that delivery where you'll get the real re-rate. But as you can see, year-to-date performance is probably 35-40% at this point in time. So folks are starting to really trust and believe that, hey, this is the team. They've got the financing. They've got operating cash flow to deliver this. Getting more comfortable with that. But at that point in time, we're 400, 500,000 ounce a year gold producer. It's meaningful. And it's very hard pressed to find a plus 5 million ounce permitted and recently constructed and delivering asset in Canada. That is very difficult to find these days, especially with the exploration upside. So honestly, at the end of the day, the low hanging fruit for us is to continue to deliver, but it's also reinvest into these assets. Do a 200,000 meter drill program at Valentine. That's going to be big bang for our buck. It really is, especially if, continued companies looking for growth. There's a number of mid-tiers and seniors looking for tier 1 jurisdictions and top tier quality assets in those jurisdictions. And, fortunately for us, we were able to acquire something last year, just before gold started to tick up again, and this is a win-win deal. Don't get me wrong. I mean, this is a win-win deal for Marathon shareholders as well as Calibre, because Calibre had 85% of our gold production in a higher risk jurisdiction for most investors. This diversifies the portfolio. Therefore, we see a re-rating on the back of that as well. Marathon shareholders and company needed additional liquidity to develop and deliver this mine, as well as some additional expertise as well, I believe, to help it through and get over the finish line. So net, I mean, we're never going to stop looking. We're always going to be looking at opportunities. Will we look at a development stage opportunity? I think the next step logically for us is probably stepping back and going, like we did in our last company with Newmarket Gold and Kirkland Lake, two producing assets coming together to create a much more robust a product for a larger pool of capital, right? That can invest in something that's producing well over 500. In this case, maybe it's 800 to 1 million ounces a year. So maybe the company comes together and merges with somebody, because our MO as executives and board members is to look at ways to create share price performance. You know, and that is, if that means putting companies together with other companies and us stepping back, we're happy to do that if it makes sense for the shareholders.
Yeah, no, I fully agree. Makes sense. Nobody. What's the saying? Nobody's gone poor taking money off the table, right? Or making money. What's the saying? Something like that. No, there's nothing wrong with making money.
We're not going to be an impediment. We're not going to be an impediment to doing deals that could create share price performance, right? And so, but we're always looking for ways to create additional value. And if that means, hey, there's an opportunity that's now permitted and in Canada or in a very, favorable jurisdiction for many investors, then we'll look at that. If it makes sense, if it's accretive.
Well, that's your job. No, absolutely. And as the shareholders, we demand that you do your job.
That's your job.
Fantastic. Phenomenal. Good. Ryan, that was a very comprehensive update and an introduction here to Calibre Mining. I truly appreciate you coming on the program. Really insightful. Any next catalysts, real quick? Any news we should be looking out for? Like, how often are you going to put out construction updates, for example?
I think probably quarterly, right? I think that makes sense. Unless there's a big milestone that comes up on the project that we think it's relevant, we'll come out. But we have, there'll be some permit stuff in Central America that we're coming up with, new mines, new open pit mines that we're developing, as well as exploration updates. 130,000 meters in total at the moment. We may look to ramp up Valentine a little bit, so it could be a larger program. So I think the big catalyst here going forward is just continuous exploration results, as well as delivery of our current assets.
Phenomenal. Awesome. Ryan, thank you so much. Really appreciate you coming on. And everybody else, thank you so much for tuning in here to the Gold Newsletter. I hope you found this conversation informative. If you did, please leave a like, leave a subscription to the channel. It helps us tremendously reach a wider audience. And of course, put a comment down below. What do you think of Calibre? What should I have asked differently? This conversation is for you, the investor. It's not for me. It's like, of course, I enjoy hosting these conversations, but we want you to get something out of these conversations. If we should have asked something differently, put it down below, and we'll make sure to ask those questions next time. Thank you so much for tuning in. And of course, we'll be back here with lots more on the Gold Newsletter. Thank you.